Most people think bonds are boring, low return, only for old people. But here's the truth. The wealthy use bonds in a completely different way, and that's one reason they stay rich. If you only see bonds as safe and slow, you're missing the real game. Let's simplify this. A bond is just this. You loan money. Someone promises to pay you back, plus interest. That someone can be governments, cities, companies. Example, you give $1,000 to a company, they pay you 5% per year. That's $50 every year. And at the end, you get your $1,000 back. Simple. You are the lender. They are the borrower. Why bonds exist? Why would anyone issue bonds? Because they need money. Instead of going to a bank, they go directly to investors. Governments use bonds to build roads, fund schools, cover deficits. Companies use bonds to expand, buy equipment, grow faster. So bonds are basically debt turned into an investment. The big question is how you make money. There are two main ways to make money from bonds. One, interest, coupons. This is your steady income. If you own a 5% bond, that means you get paid regularly. Think of it like getting paid rent for your money. Two, price changes. Bonds can go up or down in value. This is where it gets interesting. When interest rates fall, old bonds with higher rates become more valuable. When interest rates rise, old bonds become less valuable. This is why bonds can also be traded like stocks. The big misunderstanding. Here's where most people get it wrong. They think bonds equals low returns, equals useless. But that's only true if you use them the wrong way. The rich don't use bonds for excitement. They use bonds for control, stability, strategy. How the rich really use bonds. 1. Income machine. Wealthy people use bonds to create predictable income. Example, $5 million in bonds at 5%. That is $250,000 per year. No work, no stress. 2. Risk control. When markets crash, stocks go down hard, but bonds often go up or stay stable. This protects their wealth. They're not trying to win every year, they're trying not to lose big. 3. Opportunity, cash. This is powerful. The rich use bonds like a parking place for money. Why? Because when a crash happens, they already have safe money ready. Then they move it into stocks or real estate at a discount. Bonds equals dry powder. 4. Tax strategy. Some bonds, like municipal bonds, are tax-free or tax-advantaged. So wealthy people earn income, pay less tax. That's a double win. Real example. What the rich do. Person A, average thinking. 100% in stocks, chases growth. In a crash, portfolio drops 30 to 50%, panic, might sell. Person B, wealth strategy, 60% stocks, 40% bonds. In a crash, stocks drop. Bonds stay stable or rise. Now they do something smart. Sell bonds. Buy stocks at a discount. Result? They recover faster and often end up richer. Why most people don't do this? Because it feels slow. People want fast money, big wins, excitement. But wealth is built on consistency, risk control, smart timing. Bonds don't feel exciting, but they are strategic. When bonds are good or bad, bonds are better when interest rates are high. You want income, you want stability. Bonds are weaker when interest rates are rising fast. Inflation is high, so timing matters. If you're starting, you don't need to copy the rich exactly, but you can learn from them. Simple idea, young to more stocks, older to more bonds, or keep 10 to 30% in bonds. Use it as safety, opportunity, fund, income base. Bonds are not about getting rich fast. They're about staying rich, protecting wealth, being ready when opportunities come. The rich don't avoid risk, they manage it, and bonds are one of their most powerful tools. So now you're probably thinking, okay, bonds sound useful, but where do I actually get them? Good news. Today, it's easier than ever. 1. Brokerage accounts easiest. The most common way is through a brokerage account like Fidelity, Charles Schwab, Vanguard. Inside these platforms, you can buy individual bonds, bond funds, bond ETFs, If you're a beginner, bond ETFs are the easiest because they give you instant diversification. 2. Bond ETFs, beginner friendly. Instead of buying one bond, you buy a bundle. Popular examples: Vanguard Total Bond Market ETF, BND, iShares 20+ year Treasury, Bond ETF TLT. These trade just like stocks. Click buy, done. No complicated setup. 3. Direct from the government. You can also buy bonds directly from the US government at Treasury Direct. Here you can get Treasury bonds, I-bonds, inflation protected, T-bills. This is one of the safest options available. 4. Through financial advisors. How the rich do it. Wealthy investors often go deeper. They may build custom bond ladders, buy municipal bonds for tax advantages, use private strategies, usually through advisors or private banking. Simple takeaway: if you're just starting, open a brokerage. Start with a bond ETF. Keep it simple, because the real power of bonds isn't access, it's how you use them. If you want to understand money like the wealthy do, subscribe, because most people are playing the wrong game, and the difference isn't effort, it's strategy. Disclaimer: this video is for educational purposes only and is not financial advice. Always do your own research before making financial decisions.